Now that we understand how to read candles, I'm going to go over a few trades that I actually took recently, as well as show you guys perfect rejection candles and where you can enter and how I use candlesticks in my favor to enter trades, how I spot trades just using candlesticks, as well as a couple other technical analysis tools like volume, support and resistance levels, or even Fibonacci retracements, and even zones. Now in this specific setup on AMD, we have a couple zones to the downside and to the upside, and even a 50% Fibonacci level, which is very vital to this trade setup that I took today. Now I'm gonna pull up the Discord to show you guys that in the trade ideas tab, I actually had this set up here. Looking at the daily candles, guys, look at the higher time frame around the 50% Fibonacci level. This is very vital and important to understand how you use candlesticks rejections to spot specific trades. Now the higher the time frame, the stronger the setup. So this is very important and very vital to you guys' trading career. Look at these two daily candles. What are these daily candles showing you, especially the most recent one? Long wick to the upside, indecision type candle before it, but most importantly, look at where we're at in the price action. We're below the 50% Fibonacci level, which is what I have highlighted. And if you look in the most recent past, you guys can see we've been holding this as a support area for a little bit until we finally rejected here. And you guys can see that candle as well. A nice sell-off candle with a long wick to the upside. Sells off pretty hard, comes back up to retest it one more time and sells off again pretty hard. Now in this general area, you guys can see a big bearish engulfing, small green, big old sell-off candle again. And here we are once again on the daily time frame retesting it. And I even said AMD daily is getting pretty weak, ready to reverse off the 50% Fib level for rejection. Past 2 days been showing some weakness. Eyeing puts below the zone, just below it, which is 148.91. Now let's talk about that. So here's the daily candles of what had happened recently. Strong bearish engulfing right after that. And I actually took puts that day. Let me show you guys, and let's just go down lower time frames to show you guys. So as you guys can see on the daily time frame, we have a very strong bearish engulfing the day after that trade idea plan. Now let's go on a lower time frame to show you guys why I entered, where I entered, and how many times I entered as well, because I've made money off this setup so many times this day. But most importantly, I spotted it on a higher time frame, because you got to find your higher time frame setups and then you trade them on a lower time frame. So I found this on the daily, understanding that we're most likely going to reject here tomorrow or the day after I created that trade plan, which ended up happening. So what I like to do is before the market opens in the pre-market, I'm out here on my computer watching the pre-market price action, seeing what's going on. And you guys can see in the pre-market, we did try to climb here a little bit. Lots of long wicks to the upside. Pay attention to that. Lots of long wicks to the upside. And in the most previous video, you guys understand what these long wicks to the upside represent. Sellers are stepping in. Now, don't get me wrong. We did close above in this zone, but look at the long wicks to the upside. And just before market opens, another long wick to the upside, trying to sell off, trying to signal a sell off. Now, if I go to the 15-minute time frames, you guys can even see it's a little bit better. Long wick to the upside. What did we just learn about this candle right here? Inverse hammer, or if you want to call it a shooting star. Overall, I don't care about the name. What I really care about, guys, is where is the wick located? That is the most vital and important part to trading, is understanding where these wicks are. It's what represents price action and who took more control. And in this case, sellers took control of these two candles just before open. Then the last 15 minutes before the market actually opened, you get a little bit of a sell-off candle here. Now let's go on to 5 minutes and talk about it, because I took puts this day many times. And I also kept calling out this trade ideas to the Discord, letting them know that, guys, we're here again. AMD rejected here already 2 times. Are we going to do it a 3rd time? And guess what? We freaking did. Now I am going to add a little bit of technical analysis favor in my tool as far as volume. Maybe even throw on a quick trend for you guys, because I did actually have this, which helped me determine if I'm going to hold longer or not. But now that here we are, since on the 5 minutes, you guys can see first 5 minutes. Matter of fact, the 5 minutes before that, look at that rejection candle at the 50% fib level, perfectly to the T. Then you get a fat sell-off candle. And let's skip all of this noise here, besides this bullish engulfing, which takes us on back up, long wicks to the downside, indicating the trend wants to continue up to the upside. But then look what happens here, guys. This is vital to trading. I hope you guys are paying attention to this. And only the real dedicated traders that actually watch this video and dissect every single second of it will understand this to the T and upgrade their trading game. I mean that highly. So you guys can see 5 minutes gets a nice reject candle. I entered puts after this 5-minute close. I've already noticed that we did reject here. Now I entered puts on this candle right here, because I've already watched this rejection of this 50% fib level type of candle, indicating that buyers are not here, especially when we look at the volume, guys. Let's compare the volume. Look at the volume. Dead giveaway. There is no buyers here. 83,000 shares bought compared to 228,000 sold. Now, when you compare the buyer volume to all the most recent candles, you guys can see it's a dead giveaway. There's no buyers here at all. So I decided to risk it for the biscuit. And since we're still in the zone on this opening candle, I just entered because I figured that this is actually a very good entry. Now, I may have not got the perfect T way up here at 153.89, but 153.44, and considering that we're still around this general zone, I don't mind this type of entry. Take a quick scalp, sell on the next candle. I don't sell all the way below, but I do get a nice gain here. Now this day I made $164 and here's a screenshot of it. And I had a swing from last night on rum. Traded some SPY as well, but overall, most of my money came from AMD because I was spotting this one. This one was on high watch. Now let's talk about the next time we come to retest this general area. Look what happens, guys. Long wick to the upside, tried to get above the 50% fib level, but what happens? Reject again. Look at the buyer volume one more time. 312,000 sellers compared to 145. Now there is a little bit more as far as when you compare it to the last time we rejected. It's pretty much in the seller's favor. This candle's trying to get some buyers, but ultimately we're still below the 50% fib level. And then we reject here. Hard, big seller, no buyers whatsoever. So after we sell below this zone, I decided to enter puts here because not only that, we're breaking this trend here that I just created. When you grab this low, that low, you're starting to break trend. So I entered puts here. Now I sell it on the most next candle because I wasn't sure what was going on, if we're going to try to bounce here like we did in this general area. But overall, I took puts and I got printed. I printed nicely off of this simple setup, understanding that on the daily, on the higher time frame, we're rejecting the 50% fib level. And most likely, if we come to retest it again, we're going to reject one more time. And that's exactly what happened. Matter of fact, it happened twice. Now I missed the first opening sell-off, but either way, I have patience enough to come for a retest, and we retested it twice. So I entered puts in this general area, so I entered twice. First time on the first rejection, enter on this candle on the opening, then I entered again on the third rejection. So I was able to enter puts twice, not only on the first rejection, and I entered on the opening of this candle because very confident that we're going to lose this zone. But I also entered on the second rejection on this candle because we're below the zone, breaking this downtrend. Sellers are in favor because they sold off below the 50% fib level. And here we are again, printed a nice 164 on the day just off of this very simple setup. Now that we spotted the reversal and a rejection candle, let's talk about what a non-reversal or non-rejection looks like and how bulls look pretty decently strong to want to break above a specific level instead of reject. So this is the same stock, AMD. Fibonacci retracements are on. I have no other levels in this general area, but if I had to take trades just off of these specific areas like the Fibonacci retracement, then what I would do is wait for us to retest this general area. But guys, let's talk about it. Before the market even opens, we get a sell-off rejection candle and another rejection candle. But like I said in the first video, I hate taking trades at open. That's not my type of thing. There are only a few setups that you can actually take trades right at open, which is something I did today on NVIDIA, and we'll go over that right after this one. This is not that kind of day. And I'll show you on the next trade why today was that kind of day. Now you guys can see we rejected this 38.2% Fibonacci retracement level, sell off all the way down till we start creating some long wicks to downsides, indicating a nice reversal. Then you get a nice hammer candle, which is something we just learned, back into the buyer's hands. And ultimately, we're just doing some nice uptrends. Higher highs, higher lows. But let's talk about this general area real quick, because this is not what a rejection looks like. Now, there's two kind of entries. You can either enter the moment we get as close as you can to that specific level, hoping that it does reject here, which is also something I dislike. I actually like the candlesticks to show me some signs of rejections, maybe some consolidations, maybe a couple candlesticks with long wicks to the upside, indicating that we're not trying to get above and we're actually going to start reversing. In this case, you get a strong buyer candle here, right to that level. Now, if you look at the volume, guys, pay attention to what's going on with the volume. This is why I said I want to add a couple things, because I want you guys to understand that you cannot just use only candlesticks in your favor to take trades. They're a very strong, important tool and vital to trading, but you also have to add other tools like volume, support and resistance, understanding the higher low concept. And overall, this is a very strong buyer volume candle. And not only that, the candle itself is showing that it's a lot of strength. If you pull up the candlestick chart, the who's in control, or even the candlestick strength chart, you'll see that this is a very strong candle. Now, the candle right after that has no buyers whatsoever, barely none, decently strong seller. But this is not a rejection candle for me. Like I said, I need to see a long wick to the upside. Volume is pretty in the favor of the buyers, at least in this case. And you guys can see off these candles right here, indecision type candle, long wick to the downside, hammer type candle. And we just continue on a small uptrend, very small. And look at the buyer volume, guys. Sellers are not even here whatsoever at all. Now, the candle that breaks us above this specific level, look at the long wick to the downside. Buyers want to take it up. And they do. After you get a nice break, there was no retest. Or you can enter on the open of this candle in hopes that it rejects. Or if you were to take calls, you hope that it pumps up and stays above. But that's very risky to me. There's no retest for me here at all. No indication that you want to take shorts at all whatsoever. The reason why I don't take shorts is because of what I just went over. Very strong buyer candle. Volume is in the favor of the buyers. And there's no signs of rejections anywhere here. Matter of fact, there's more signs that they want to continue on up this trend. And if you watch the higher low concept as well, you'll understand that we are in more of the favors of more higher lows and higher highs. Overall, This candle gets a nice decent break to the upside on this specific level, and buyers just take full control all the way through. Straight big body type candles, long wicks to the downside, indicating that buyers want to continue this small short trend until you get a type of candle that we just learned about. Now I wouldn't take puts here just off of this specific candle alone, unless this candle was actually way up here at this zone. Yes, I would take puts, but since it's in the middle of kind of nowhere and there's still some room to actually climb to the zone, I wouldn't enter. But if you were just using candlesticks in your favor, and you did take shorts here because you're noticing that this is the first time we're actually probably going to switch trend, which it is at the very top of the trend as well. Long way to the upside. Sellers took control, no buyers in the volume, and you would have got paid, but it's not something I would have took myself. Now let's talk about Nvidia real quick to show you guys why I took puts right at open, why I didn't take it the second time we retested the general area, and how I even spotted this in general, because that's very important as well. Now I am going to pull up the Discord again to show you guys on the trade ideas tab what I looked at and what I was looking for. So you guys can see at 4:33 p.m. what day is this? 9/16. So 2 days ago, I said once we officially get a 4-hour close on Nvidia below this 50% fib level, best believe I'll be shorting the F out of this, waiting for a drop to enter. Why and how am I creating that type of trade plan based off these candlesticks, Fibonacci retracements, and support and resistance levels? Because on a higher time frame, like the 4-hour time frame specifically, you guys can see every time we're around this 50% fib level and we're holding above it, it likes to bounce. This time, look at the candles. What are they telling you? Long wicks to the upside, long wicks to the upside, long wicks to the upside. Sellers are trying to sell it off, and they do sell it off. Now I missed that area, but I wasn't creating that. That wasn't my trade plan. My trade plan was to short it this time we fall below again, because as we climb above and hold it one more time, here we are again with the weird kind of sell-off candle, more in the favors of sellers, indecision type doji. It's a very fat 4-hour candle. Now, a day later, guys, a day later, Nvidia loses that level on the 4-hour time frame, the time frame that I was watching, with a strong bearish engulfing, breaks below the 50% Fibonacci retracement level that I was just talking about. And I said Nvidia lost a really strong level on the 4-hour time frame. Now in the Discord trade zone, early in the morning, 10 minutes before market opened at 6:20 a.m. yesterday, no, matter of fact, sorry, today, Wednesday, September 18th, today, and you guys can see it says today, Nvidia looks ready for some puts. Hate taking positions at open, but this one looks good. And guys, like I just mentioned, I usually hate taking puts right at open, or a position in general right at open. But I'm going to show you guys why this one looked greater to take right at open than most. Matter of fact, let me show you guys what I was thinking off this picture alone here. 4-hour bearish engulfing. Sellers are in control. Another sell-off candle below zone. That's very important because guys, we're below the zone. Candles are closing below the zone. No candles are back above this 50% retracement, throwing me off, making me feel weird. I'm very confident that shorts are going to pay because we're below the zone. Not only that, but I'm just going to say this fib level. Every time I say 50% Fibonacci, it just throws me off. So we're below this Fibonacci retracement level, guys. Candles are below it. They're not showing me any signs that they're getting a strong buy above. And if there was a long wick to the upside, that would even be more confident. But overall, we're closing below every single time on a 4-hour time frame chart. Now, this is where I took puts, but we're going to go in the chart as well to show you guys. And I said easy 20% because it was a very easy 20%. Now, the reason why it was a very easy 20% fib is because when you go on the 30-minute time frame, the higher the time frame, the stronger the move. Remember that, guys. You guys can see that one time we tried to get early in the morning at 1 a.m. in the zone, but we rejected it super hard. Bounced off the low of yesterday, which is LOY 114.83. And the area that is this right here. This is low of yesterday, LOY, low of yesterday. I like to mark that off to also take puts below that general area sometimes too as well. Now on the 30-minute time frame, you guys can see every time we get in this general zone area, we reject. Now don't get me wrong, there is a long hammer here, long wick to the downside, and we do try to create some bullish momentum. And let's talk about the 5 minutes at open, because the 5 minutes at open is where I entered right away. Now the moment we started to climb and get as close as we could to this 50% Fibonacci retracement, I entered puts. Now at one point I was down about 12%, and I remember because it did climb up a little bit, but a long reject wick to the upside, sellers took control, and this is where I made my 20% gain, guys. I only hopped in one contract because I did not want to risk that much, and it was a little bit over 230, but we got a nice 20% gain off of this specific contract. Very nice gain today, guys. $40 off one single contract. And then we ultimately ended up bouncing off low of yesterday. And the reason why and how is because, guys, look at the candlesticks. Where are they closing? Every time we get a long wick to the downside, buyers buy us up. Long wick to the downside, buyers buy us up. And we're getting a nice candle close above these levels, indicating that there's no reason to enter short at all. Even if sellers are trying their best to take it up below, buyers keep stepping in and buying it. That's very vital to understand, because what you need to understand is only take shorts or even a position in general when you get an actual candle close below. Now let's talk about why I did not enter on the second time we retested this general area, because just like the last time on AMD, you could risk it for the biscuit and take puts here and just hope that you get a reject candle. But I don't like doing that, especially look at the volume. It's very strong. No sellers whatsoever at all. I wasn't confident to take a retest trade and re-enter one more time. Even though we're creating lower highs, meaning that we never got above the most recent high on the open, we're creating lower highs. I just couldn't do it. But guys, look what happened. Bearish engulfing candle. Sellers take control and sell us off pretty hard. Until we try to create some buyers here. Long way to the downside. We retest again. Low of yesterday, guys. Now, how do I know not to take puts here? It's because, guys, look at the candle closes. We're closing above yesterday's lows every single time. Where most likely what's going to happen is bounce. Now, the reason why I don't like to take calls here is because on a higher time frame setup, I mentioned anything below this 50% Fibonacci retracement level or anything below the zone is where I'm trying to take puts at. So I'm not going to switch my bias and start trying to take calls just because maybe we might bounce here. You could, and there's many traders that do this, but that's not my strategy. My strategy is a break and retest, which is why I entered right at open on the first time. But since we have hindsight in our favor, let's talk about where you could have entered on another break and retest strategy. Now, this is something I didn't take, but I did end up taking calls for FOMC today on SPY, which is how I got paid 120 today. And before we get into that break and retest in this general area, let's talk about this specific area that we bounced on again, because we bounced here again. Long wick to the downside. Back then in life, I used to chase this. I used to think, oh, we're going to break below. Let me enter short here just to get slapped in the face, because now we're creating a bullish engulfing candle, long wick to the downside, another long wick to the downside, and even more of a long wick to the downside, another bullish candle pushes us on up. But ultimately, we're still following trend, lower highs and lower lows. You guys can see that. Watch my higher low concept to understand that. Very important, very vital. Buyers try again, but ultimately sellers take control here. Big sell-off candle. No buyers whatsoever in the volume at all. But what's happening here is what I want to talk about and how you could enter a trade. Because notice how we never closed below low of yesterday at all until this candle right here. Very important, very vital. Now, since we closed below this general area of low of yesterday, 114.83, is where I would start to enter shorts. Start looking at put positions. Now, don't get me wrong. Long wicks to the downside, another long wick to the downside, even stronger buyer volume would freak me out and practically scare me. So most likely I would not enter. But this is a break and retest strategy, because you notice every time we hit this general support level, it always bounces every time. Besides here. Finally get it closed below. Finally get it closed below. Nice sell-off candle here. And this is where me and my friend Alias like to enter on candles like these. Reason being is because, guys, we just learned how to read candlesticks. This candle is an indecision type candle. We're below the low of yesterday. Big sell-off candle before this one. And ultimately, buyers do try, but sellers step in and take over. Small body. Now, if you would have missed that, fine. You would have missed that. I probably would have missed that too, which is most likely why I didn't even enter. But I did already announce on my Instagram, and if you guys watch my stories, which my Instagram handle was learn.option.trades. You guys would see on my Instagram, I said I'm not going to take any more trades after that first NVIDIA put short position, because I'm going to wait for FOMC, which is Federal Open Market Committee. Jerome Powell's going to make a decision on the interest rates, which affect the market heavy, and I'm going to show you guys that in a second. But overall, that is a break and retest strategy. That is where you should enter puts after you get a nice break below. Candlesticks are actually closing below. Maybe watch for some reject candles, but in this case, there was basically no reject candles except a break and retest type strategy. Big sell-off, which is the reject. Then you get an indecision candle here, which usually is followed by another sell-off candle, which is my favorite. Which now, guys, let's talk about SPY, which is how I made my 120 on the day. Went from 40 to another $80 gain. Now, early in the morning, guys, today at 6:44 a.m., I said I'm going to risk cheap calls towards FOMC. Now, this isn't really anything candle-wise, technical analysis-wise. This is fundamental trading to the max. I said I'm going to risk cheap calls towards FOMC. I even said on Twitter, who's loading up some cheap calls for FOMC the day before? I'm debating to do so since we might get a rate cut. An hour later, after 6:20 a.m., I even said again, gonna cool it till FOMC. We'll enter a cheap call later. 2 hours, 3 hours later goes by, 50 more minutes, guys. Gonna get a cheap call before, maybe even average down more if it dips hard like usually does, which it actually did. Let's talk about that. So I entered 2 calls, guys. One at 10:11 and one 15 minutes before the market committee opens. So I'm gonna pop up on the screen my contract positions, but I entered 50 minutes before the market, before the FOMC meeting even happens. I buy one of them for $51 at 10:11. 30 minutes later at 10:44 a.m., I buy another one. I do exactly what I said in the Discord, saying I will even average down, which you guys can see at 10:45 a.m. This is where I average down at. I bought the first one at 10:11, which is this general area, so it really wasn't that far off. $2 difference. As soon as FOMC happens, long wick to the downside and a straight rocket to the upside, guys. Straight rocket. $91 exit. And now, like I said earlier, this is not technical analysis. This was straight fundamental analysis in my favor, just off of rate cuts alone. And this is how I was able to make 120 on the day. But overall, that wraps up for today's video on how how I use candlesticks in my favor to enter and spot trades. I was hoping this video would be a short one, but it ended up being about 30 minutes. And if you guys want to have more educational videos like this, be sure to join the Discord. Link is in the bio to have full access to all of the educational courses. But this is a follow-up video for what I just posted on how to read candlesticks. And this is how I use candlesticks to enter trades, spot rejections, and if we're going to continue on to the upside.